Hi, I'm your host Danny Dividends and this is Clueless About Crypto. Welcome dividend trackers to our 17-part series on dividends, which is income just waiting to happen. Our guest is Wayne Smith and he will tell you more about dividends. Let's go.
Dividend Growth Investing. What strategies are out there? I hope most of you are familiar with using Dividend Aristocrats, those top stock that sit out there. Yes, they are a little more expensive, but they're very stable companies. They have a need for customers, okay? So if you frequent certain companies and you're a buyer of their goods and services and things of that nature, you're probably frequenting someone in the Dividend Aristocrat arena. Why not, if you already have their stock, see if you're getting a dividend in your portfolio and check that out and seeing how you can capture that dividend and make it work for you. Now, in the Dividend Aristocrats, there are 65 of them now. Some time ago, about a year ago, there were only 49. COVID taught us a lesson. It beat up a lot of companies that actually needed customers to buy their goods and services. And when those customers weren't there because of COVID and the lockdowns, those companies could no longer pay their dividend. Please keep that in mind. Don't trust that every company will always pay their dividend. Things change. The market can change. Their situation can change. They can be in the middle of a merger or something of that nature. They could be going bankrupt, in a buyout. Please keep that in mind. COVID taught us that lesson. Let's not quickly forget that lesson. So these Dividend Aristocrats, as I said, there are about 65 of them now. That means that they've paid their dividend. To be an aristocrat, they've paid their dividend for 25 consecutive years. They have not cut their dividend. They have not eliminated their dividend in that time period. And with further research, you can find some of these great companies. One of the things is their yield, if you add them all together, they'll range between 4 and 0.9% yield. So they average around 1.4% yield or return on investment. So that's important to know. Now here's a good thing. Most of these companies, when we say that they've paid over 25 years, if you look at the industrials in that sector, industrials have paid out their dividend nonstop for an average of 41.37 years. So if you're going to look for a dividend stock that's stable, look in the industrial sector of the Dividend Aristocrats. Then keep in mind also about some other things. Time with the Dividend Aristocrat strategy is important. When you can put time, 10, 20, 30 years into your strategy, you'll do very well. But keep in mind, this is a destructive, okay? It's an initial investment destructive or capital destructive method of retiring on dividends. What do I mean by that? I mean that when you take your money out of your portfolio, okay, you're going to have to sell your stock, and you're going to hope that your stock has appreciated in value so much you can take out at least 4%. So let's say you have $1 million in there. 4% would be $40,000 a year, okay? So you're going to be selling your stock, even though it's still producing a dividend. The dividend is so small that you'll have to sell your stock to live off of and keep up with inflation. So those are some things to keep in mind. It is a capital destructive method, but if the stock price increases dramatically, you could do very, very well in your retirement. So time is important for this particular strategy. I want to thank you for your time, and I want to also remind you that I like my dividends like I like my amaretto sours, shaken, not stirred.